All right, let's get practicing in QuickBooks Online. Grab the link below in the description so that you can follow along. All right, here we are in the QBO Gym. And the QBO Gym is a place where we have numerous exercises that simulate real life scenarios that you may encounter as a bookkeeper. Every single month, we come out with new exercises for you to practice your skills, and we break it down for you into 4 different sections. Today, we're going to be working in the January strength training section where we really focus on that opening balance equity. At the top here is an animated video to give you a synopsis of what you will be doing for Craig this month. He is our fictitious business owner. Further down is an interactive quiz to test your knowledge. Below that are all of the exercises within that section. And then at the bottom here, once you have completed all of those exercises, we do have an optional area where you can go ahead and use our sample posts to use on LinkedIn to share with everybody what you have learned so far. So let's go ahead and dive right in with our exercise today where we're going to practice fixing inventory adjustments. Go ahead and click on that link to pull up the exercise. I have it over here on the right-hand side, so let's see what our scenario is today. While in the opening balance equity account, you see some inventory adjustments that were coded to opening balance equity. So these will need to be fixed. You will need to be in the same session of the sample company that you did the previous exercises in. If you have not completed those yet, go ahead and click on the link on the top right corner of your screen. That'll take you to the first exercise. Complete that one and the one after that until you get back to this one. So while in the opening balance equity register, you notice 4 items that refer to inventory. How did this happen? I'm going to pull up here this is the this is the sample company. This is the last page that I left off of from the previous exercise. Here are those 4 inventory entries that we were just discussing in the exercise. So earlier we saw how creating new bank accounts with a starting balance creates an entry in OBE, which is opening balance equity. Creating new inventory products with a starting quantity does the same thing. As with a bank account, the correct procedure is to start with the quantity of 0 and then add transactions that adjust the amount. If you are to enter a starting quantity on hand instead, QBO will multiply that initial quantity on hand by the cost and create a starting inventory adjustment in the inventory asset account categorized as OBE. This is why it's really important to start with 0 and then create transactions to add in that starting inventory. So this is what happened to Craig, as you can see by looking at the inventory asset in register. What we're going to do is we're going to start these starting inventory transactions cannot be deleted or edited. So instead, we're going to need to make some adjustments to get them out of the OBE account, that opening balance equity account. Now, as a note here, remember that when dealing with inventory, you need to adjust both the quantity and the value. So we'll have to take both of these into account. We're going to start by running a report to show us what we need to know. To do that, we need to, on the left navigation bar, click on Reports. That is over here on the left-hand side, about halfway down. Click on Reports to get to the Reporting Center. Rather than scrolling through, we're going to search for the report that we are looking for. So in this search bar here, go ahead and start typing inventory so that we can see the inventory valuation detail report. Go ahead and click on that to have it run for you. We need to make some adjustments here to have all dates included. So at the top of this report, you see this section. In the report period field, go ahead and click the down arrow and then select all dates. And then we want to run the report again. Now, the resulting report has everything you need to know to make the adjustments. We're going to keep this report handy for the rest of the exercise and note the dates will be different than what is shown on here and possibly on my screen as well. So the one that we're looking for, this quantity adjustment, the start here, Whatever the date is that you see here is the date that we are going to be using. It is the same date all the way through, so it'll make it very easy for you. Just make sure that you remember whatever the date is here in that start, that you remember it for the next part of this exercise. So take note of that. For me, it is 12/13/23. Yours will be different depending on when you are doing this exercise and watching this video. So the first thing we will need to do is take out the initial balances. Since we cannot delete or edit the starting balance transactions, we need to add balancing ones, which we'll do using the inventory quantity adjustment transaction. So let's go ahead and click on the plus new button and then click on inventory quantity adjustment. So let's click on that plus new button. And then under the other section, we're going to click on inventory quantity adjustment. We're going to enter the date of the initial transaction that was on that report. Remember, your date is going to be different than what I have here, but be sure to have the exact same date that you pulled up on your report. So for me, that was December 13th of 2023, so I have that there. Note that if you are making adjustments for starting balances with different dates, you would need to create separate inventory quantity adjustments, each with the correct date. But in our case, all of those dates that were on the report are the same. So we're just going to include them all in this one transaction. So again, if you had multiple dates that were showing on that report, you would need to do an inventory quantity adjustment for each one. But since they're all the same date, we're going to include everything right here. So next we need to indicate which account to adjust. Usually for inventory adjust or quantity adjustments, you would indicate a shrinkage account, but in our case, this account we are reducing is the opening balance equity because everything is showing up in there. That is where we need to adjust it, not this inventory shrinkage, which you would do if you're just making regular inventory adjustments separately. So go ahead and click into that. I'm going to start typing in opening to get the opening balance equity account showing up. Go ahead and click on that. Now on the first row under product, we're going to select pump. So click into that 2 times. Pump actually happens to be right here at the top. So go ahead and click on that. Now, next we will need to enter the number of pumps that we are removing. As you can see on the report, it had a quantity, an initial quantity of 16. So we want to remove that initial amount so it equals 0. So in that case, it would be a negative 16. So in the change in quantity, we're going to change this to negative 16. You can click out of that and you will see that the new quantity is showing. So let's go ahead and do that for the rest of the items that were on that report. So we did that for the pump. Let's go ahead and do it for the rock fountain. Click into it 2 times. Rock fountain happens to be the second one on the list. Click on that. The change in quantity, we need to adjust this to a negative 3. Then we want to do the sprinkler heads. So click into it, select down here, sprinkler heads happens to be the third one. This is making it very easy. The change in quantity, change that to a negative 10. And now the last one that we want to do is for sprinkler pipes, again, a negative 10. So click into that. Sprinkler pipes happens to be down here, this fourth one. Click on that. And then the change in quantity, again, is a negative 10. Click into this. And then in the memo, I don't know if you can see it because of my video screen, but we want to click into this box and change this or add a note here that this is the starting balance adjustment. It's always good to make memos. These are internal notes for you so that if you ever need to click into this transaction and say, hey, why are we having this kind of change in quantity? Having this memo here is just an extra note to identify why we have this transaction and what's going on here. So now that we have added all of that, we just need to save and close. Click on the save and close button right here. And now it shows that the inventory has been adjusted. Now at this point, we have undone the incorrect starting quantity entries and removed them from the opening balance equity account. Remember, balance, not the account itself. account itself, because we cannot remove them from the account, but we are adding balancing transactions to bring that total down to zero. But we still had inventory products on that day. So, how did we get them? Well, Craig purchased them. So, we need to create a purchase transaction. Remember, we started with zero and now we are showing how we are adding that starting amount. And by doing this expense transaction, it is indicating that. So, we're going to click on plus new and then click on expense. The plus new button on the left hand side, click on that, and then under vendors, click on expense. Now, for the purposes of this exercise, we will assume that Craig purchased all of the items at Hicks Hardware. If he purchased them from different vendors, then we would need to create separate expense transactions indicating for each person that he, or each vendor that he purchased them from. We will also assume that he purchased these from his checking account. In a real life scenario, though, you would need to confirm this with Craig or look at documentation. So in the payee field, let's go ahead and select Hicks Hardware. You can click into it and click the down arrow and scroll down to Hicks Hardware, or you can start typing it in the field. The payment account is showing us checking, which is what we assume that he had paid for in this scenario. Again, in a real life scenario, you would want to check with your client or look at documentation to see where the payment or where the expense was made. In the payment date field, we're going to enter the date that was from the report. This would be the same day as the initial starting balance entry. For me, it's already showing correctly as the date that I need. You may need to make adjustments here based off of what was on that report, what we just created in the inventory quantity adjustment transaction. If you need to make an adjustment, just click into it and then select the date that you need. Now, once Hicks Hardware is selected, QBO is going to pre-fill the same category that was used the last time for this vendor, the last time this expense was made. This is not what we want, so we are gonna go ahead and delete it. Click on the trash can icon for that so that we have a clear balance here. There is nothing showing up on this transaction. You can see that by having a zero amount. Since these are inventory items, we're going to need to use the item details grid. So we're going to click on the down arrow to expand that. If you want to click on the down arrow here next to category details to collapse that, you can do that if that's easier for you to see. So on the first row, we're going to click into product service field and then select fountain pump. Click into it 2 times and you will see pump is right here. That fountain pump is the first one. Go ahead and click on that. Now we're going to enter the initial quantity from our report. In the inventory adjustment, we had removed them so that the starting balance was 0. That's why we used a negative number. But since we are adding these back in because this is the amount of quantity that he started with, we're going to use the positive number. And this is what he had purchased in order to start that quantity. That's why we're entering it here as the expense. This is showing the purchase of that, and then we are showing the quantity that it is starting with, or the amount that he had purchased. So go ahead and for this one, we're going to type in 16. We need to fill it out for the rest of them. So let's go ahead and do that. On the second line, click into it 2 times. You're going to select rock fountain, and then in the quantity, adjust that to 3. The next one is sprinkler heads, and there were 10 that were purchased. So click the down arrow, and then you can scroll down until you get to sprinkler heads. Click on that, and then the quantity was 10. And then last one is the sprinkler pipes. Click into it 2 times. You can either type in the box or you can scroll down until you get to sprinkler pipes. I'm not sure if you can see with my video screen here everything, but it is the last one on that list. And then we're going to change the quantity to 10. When you click out of this, you will see that QBO has made the adjustments. It's done all of the calculations for you and adjusted that total amount, which is great. It's less math that you have to do. Now, note that in a real life scenario, you would need to confirm that the rate column, which is right here, on the expense matches the rate column on your report, and that the total FIFO, or first in, first out cost, on the report is what is calculated in the amount field on the expense, which is right here. If they don't, then you need to make the adjustment on this expense to match the report. But in our example, we're just going to match these. We're going to assume that these match up, excuse me, without any kind of adjustments. So we will assume that the information that is here is matching what is on that report. But again, you may need to go back and adjust it. And as a note here, if it's easier for you to keep that report handy, you may want to just download it or export it so that you can see all the information and you can go back and forth to refer to it. But we're going to assume that everything is good. So all we need to do is save and close this. Click on that green save and close button down here. And when you do, the expense has now been saved. And when I mentioned here before about exporting it, you would do it here by just clicking on this down arrow and then selecting export to Excel or PDF, whatever your preference is, if you need to keep it handy so that you can go back. We've made it very simple for this exercise to show you the process of doing it and not complicating it too much. But if you did need to make those adjustments and you want to refer to the report, that's how you would export it. So as a final step, let's see what happened at the opening balance equity account. On the left navigation bar, we're going to hover over transactions and then select chart of accounts. Transactions is here, hover over that and then select chart of accounts from the drop down. Now on the opening balance equity line, we're going to click on view or register. So you need to scroll down just a little bit, not too far. And here it is, that opening balance equity. Click on view register. If you get any pop-ups, just go ahead and click out of them. Now in the register, you could see that each inventory increase, or for each inventory increase, there is a decrease. The initial transactions do not disappear, but our adjustments create an offset. So here are all of the original ones. This is showing that starting, and these are the ones that we had adjusted. So here you see the increase is showing the amount that was originally put in there, and then this decrease is matching up here with each one so that it is showing the balances are now zeroing out. So that is how you would make some adjustments to the inventory as it relates to the opening balance equity accounts. And if you have any questions or want to know more about the QBO Gym, just go ahead and click on the link below in the description. Be sure to leave this session of the sample company open, as you will need it for the last exercise in the strength training section, where we practice fixing issues with loans as it relates to opening balance equity. And I will see you in the next video.